Hey everybody, Jake here with Jake Wu Market Research to go over the weekend video update into Monday, December 11th. We are going to go over ES and QCL on the future side of things. We'll definitely go over Bitcoin, and then I actually added a few other names that I typically don't add to these weekend videos to just look at a couple other names that are looking very interesting going into the week ahead. So before I get started, just wanted to mention we will be going over the weekly candle charts. If you do want more in-depth analysis, especially written analysis on these names and many more names that I go over in the Twitter subscription for $10 a month, you can check out that Twitter subscription and sign up in the link in the video description. You pretty much just go to my Twitter, click subscribe, and you can subscribe within literally 30 seconds. So that is where all of the daily and weekly written analysis will be. This will just be a quick overview of the weekly candle charts for the names that we will be going over here in a second. And remember, I do have the partnership with Optimus Futures. That is a futures broker. So if you're interested in trading futures, this is definitely a broker that you can check out. I have the link in the video description as well to check them out. And if you have any questions, you can always send me a DM on Twitter or just comment on the in the comments section below. So starting with ES, the S&P 500 E mini futures, we had a very strong breakout this week. So last week, technically, we slightly broke out, but this week we really broke out through this diagonal trend zone that really originates from the all-time highs back in very early of January of 2022. So what we had here was initially during the beginning of the week, we had a pullback. We retested this area, this resistance zone that we, as I mentioned, very slightly broke out of last week, retested it, and had a very strong close to the week. And that is exactly what you can expect when you have any type of breakout. You break out, you retest where you broke out from, and then you continue up. And going into the week ahead, you definitely are looking at a pretty bullish chart across the board for at least the broad market indices. But you can always have a pullback as well going into the next couple weeks. So we did technically retest this area just within this week, this previous resistance zone. But going into the next few weeks, it's not, especially with seasonality, I don't think it's likely that we will pull back like that. But anytime you have a breakout, you always have to assume that you're going to have a retest within 3 to 4 candles. In this case, 3 to 4 candles is 3 to 4 weeks. But going into the end of the year, this is generally a pretty seasonally bullish time of the year, and you've got the market really firing on all cylinders. So with this breakout, the medium to longer term target, anywhere from a month to 2 months, is all-time highs. So if we continue up and really have strength in this market going into the new year, it would not shock me at all to see all-time highs. And it's been almost 2 years since we've tested and hit new all-time highs, and that is really something you don't see too often. So it wouldn't be shocking at all for the market to finally just continue to move up as it does over the long term. And all-time highs would be anywhere from the bottom of this area from 47.58.50 to 48.08.25. And that is an area that you could potentially have some resistance in the next 1 to 2 months if we do continue up going into the new year. Now, going into NQ, we have kind of a similar setup here. I actually am focusing on ascending triangle forming here that we broke out of this week. Really strong candle close for the week. You can see here that we have a huge outside bar from the previous week. So if I remove this circle, you can see here that the range from this week takes out last week's range and the previous week's range. So we pretty much took out 2 weeks of range-bound activity. So really a very strong breakout. And all-time highs are a lot closer even here. And that ranges from 16,628.50 to 16,767.50. That is the pivot zone. And I always am using zones. I'm not using precise levels because the market just doesn't work like that. As you get close to the bottom of a zone, you start to say, okay, we're getting in the zone. As we get to the top, maybe caution is warranted. And so you can use these zones as really even scaling in, scaling out points, depending on if you're taking profit or if you're actually scaling into a position. So that's why zones are so crucial. Going into crude, this has just been an absolute bloodbath here. And actually a pretty cool case study. So if you remember the video from a couple weeks ago, we were discussing that we were on this trend zone in I guess the second to last week of November, and this was right around the week of November 20th. And so when we did this video going into the next week, I mentioned, possibly a short-term bounce here, and really I think all we're going to get is this May pivot VWAP, and that's exactly what happened. We rejected slightly above this VWAP, and the VWAP is not going to be perfect, but really with this VWAP here, it's not respecting anything perfectly even back in May and June of 2023. So really adding any type of percent offset really didn't make a lot of sense here. So all in all, this VWAP did act as textbook resistance, pulled back, closed near the low of the week, and then still held the support trend zone, and then finally broke down this week. Had a little bit of a bounce into the end of the week, but still a very ugly close. And remember, anytime that you get a breakdown as well as a breakout, it's always the default assumption that we could potentially retest this previous support, which would act as resistance above. Going into the week ahead, that resistance zone is anywhere from around $73, $75, all the way up to around $75 per barrel. Now, these trend zones are sloping, right? So this is upward sloping. So if this took 2 or 3 weeks, the zone that I just mentioned would be different, right? If it took not next week, but the week after, that the bottom of that zone is anywhere from around 74.05 all the way up to around 75.25. So remember, these are not static price levels like a basic horizontal zone like we have below, which is the previous lows here that we saw in June from 66.80 to 67.35, which is the downside target after a potential retest of this support zone. So just keep in mind, when you are looking at diagonal trend zones, these are not static. They're changing with the slope of the line. But if you are looking at just basic horizontal levels, those are going to stay the same over time. Bitcoin, this has just been on an absolute tear. We were really looking for this break above the horizontal zone here that we saw in mid-November. We finally broke above that in last week's trading, and then we just continued to move up here. And it's Friday, so we still have 2 trading days left, but the theme recently has really been these weekend pumps. So if we do get a continuation up this weekend, the main area that I'm watching for is simply just this previous pivot zone that we saw in the late winter and early spring of 2022, which ranges from 45,900 to 48,200, and that would be our potential resistance. If we break above that, I think we could definitely move into the mid 55 or 50,000s, anywhere from 55,000. And this is that general area here. So before we get to 55,000, you do have a little bit of a pivot here. That is ranging from around 50,800 to 51,955. Let's just call it 52,000. And so some of these ranges are pretty big, but we really haven't been respecting some of these technical levels that much. So overshoots are definitely happening across the board. So that's kind of why I say the mid 50s rather than just this pivot here, which is right around, as I mentioned, 50,800 to 52,000 above. If we do get above 48,200, so just keep that level in mind, but it wouldn't shock me to get into the mid 55s if we have a weekly close above 48,200. Now, going into some individual names, Mara and Coin, the first 2 that I'll be going over are definitely proxies to Bitcoin and crypto in general. Mara had a very nice breakout this week. You've pretty much had straight up the last 4 or 5 weeks. And so what the main thing that I'm focused on here is the fact that we did break out of this downward sloping diagonal trend zone originating from the all-time highs back in November of 2021. We closed near the high of the week, so if we do continue to move up and we do get a pump in Bitcoin going into the weekend, it wouldn't shock me at all to see the previous highs tested from July and August of 2022, ranging from 1825 to 1990. I do have more details on the daily chart with some of the shorter term targets above before we get to that area. And as I mentioned, that's in the Twitter subscription. It's only $10 a month, 33 cents a day. And it's all written analysis going into the weekend that I did before the weekly candles closed, because what's the point of getting the analysis if the market's closed? You can't really do anything until Monday. So I like to put out this information before the weekend closes. So if you are finding something that looks interesting into the week ahead, you can do it before the weekly candle is closed and you can't really trade until Monday. So as I mentioned, I do the weekend analysis, but I also do daily analysis Monday through Friday. So a lot in the subscription to take advantage of, and this is one that I definitely do track daily and one that I'm pretty bullish on with this breakout that we have going. Interestingly enough, though, miners compared to, if you're comparing the spot price of Bitcoin that we saw back in July versus the price now and the price of Mara, this is extremely weak when it comes to just comparing what Bitcoin was at when Mara was at $19 last time in July and compared to what it is now. So whether miners are lagging or maybe there's just more supply because some of these miners definitely did do some dilution events over the last couple months, maybe that could definitely be it as well. But either way, we are not keeping up with the spot price of Bitcoin, at least for now, for these miners. Coinbase, however, definitely is. So that's kind of why I think maybe these miners are having some trouble keeping up with the Bitcoin spot price compared to where they were in July because of that dilution. You really don't have that type of dilution in Coinbase, and that's why I think we've seen these higher highs here and this actually keeping up with new highs as Bitcoin hits new highs. Going into next week, we definitely have an area from February of 2022 and into mid-March of 2022 that acted as previous support. That would now flip to potential resistance from 150.15 all the way up to 162.20. That is a classic SR flip. So definitely expect potentially some resistance above here. But if Bitcoin just continues to do what it's doing, a weekly close above 162.20 would definitely trigger a bigger breakout, and I do have those levels that I've gone over with Twitter subscribers. There's a few gaps above that are the main areas of potential resistance and targets if we do get above 162.20. Going into NVDA, pretty strong price action this week. We did get a continuation down. This was an idea for downside last week. We did get a move down almost to the target that was established in the subscription. We did get a nice move up, and we did not break above the threshold that I was looking for the bull thesis to play out. However, we're getting very close to the apex of this ascending triangle. And one thing that I really wanted to point out here is, we do have the previous highs here that could be resistance, and this is assuming that we break out, right? If we break down, this is not the case. But if we do break out of the ascending triangle here, we don't have in this ascending triangle, the top of the ascending triangle is right around 505.50. If we break out of that, we don't have any price action to look at to the left of the chart because we're already pretty much at all-time highs. And so when I say to the left of the chart, I mean previous pivot points, gaps, anything that could act as potential resistance. We don't have that really going into the coming months if we do break out of this ascending triangle. So the best way to come up with a target is simply just using the 1.618 extension. That is currently right around 571. And what I'm doing here is I'm simply just taking the high here, connecting it to the low here from late October. That's your measured move. And then the 1.618 extension is a function of that measured move. And as I mentioned, that's right around 571. Do I expect that to happen in a month? No. We have to look at everything as if then, right? We can't even think about the 1.618 extension until we break out above the top of this ascending triangle resistance. So if we break above and close above 505.50, then the upside target over the longer term, maybe 6 to 8 weeks or more, because that's over a 10% move, then the 1.618 extension would be relevant. But I still wanted to point it out just to highlight how you can really look at targets if you are near all-time highs and you don't really have any pivots or gaps to reference to the left of the chart. Tesla is one that has had 4 green weekly closes in a row, yet we have really gone nowhere. So this is definitely a bullish engulfing candle on the weekly chart for this coming week. I do want to point out, though, that we have some very heavy supply above, and I call it break-even supply because essentially that volume above is volume that technically is currently at an unrealized loss. So as price gets back up into this area, let's say that you bought Tesla at 255 and then we drew down all the way to around 195. As you get back to break even, you're probably going to either take some off the table. Maybe you take fractional shares off the table. Maybe you take 50% off and let the rest ride because you just dealt with a huge drawdown. You don't want to have that much exposure. Or maybe you get back to break even and you want to get rid of the entire position. Either way, if enough market participants do that, that adds supply onto the market, and that creates kind of friction for price to get through. So this zone is from 245 to 265. That's a huge area for price to really have to eat through this upside supply. So we're pretty much right near the bottom of this break-even supply zone, but it goes all the way up to right around 265. So until we can get above 265, definitely anticipate a little bit of friction here. But all in all, bullish engulfing candle generally is a more of a statistically bullish setup versus bearish. So we'll see what happens going into the week ahead. But still, we had a lower high from last week, but we did have a higher low. But other than that, really, you got to go down to the daily candle to really look at things in a little more depth. And as I mentioned, I did do the written analysis for Tesla on the daily chart as well in the Twitter subscription before close today on Friday. Apple is just an absolute machine here. A huge outside bar forming on Apple. And same thing here. Apple does have the previous all-time highs to get through before we even consider the 1.618 extension, but it is something to keep in mind as we're nearing all-time highs. All-time highs pretty much range from 197.20 all the way up to around 198.25. If we get a weekly close above that area, remember, anytime you have a breakout, you always want to at least assume you're going to get some type of retest before a continuation up. So 198.25 is the main price area that I'm watching for a weekly close above to really get even more bullish up to around 218.35. That's the 1.618 extension. If you want to see me draw this out once again for this one, I'm just taking this previous high here, connecting it to this low from the week of October 23rd of 2023. And then that 1.8 extension is right, as I mentioned, at 218.35. So that would be the longer term target. If we do get a weekly close above, that would trigger the bull thesis, but that doesn't mean that will happen in a week, 2 weeks, even a month. Apple's not a slow mover, but it's also a huge market cap, and it takes time for moves to happen. So that's something to consider as well. Apple has some pretty strong moves on a daily basis a lot of the time, but 218, that's a decent amount of upside to get through before we get to that 1.618 extension. So don't expect this to be a 1 week candle up to 218. That's just not how it works, especially with these large mega cap stocks. AMD had a very strong week. Bullish engulfing candle, outside bar, very bullish, at least from a weekly candle perspective. We do have a very large ascending triangle forming here, pretty much originating from this pivot here from February of 2022. We also have resistance from May of 2023. And now we're retesting that area now. This area ranges from around 128.25 all the way up to around 133. So we're not out of the woods yet. We're at this ascending triangle resistance zone. But with this bullish engulfing candle and this outside bar, remember an outside bar is when you're taking out the previous week's range on the downside and the upside. This does look pretty promising, but until we get a weekly close above 133, there's definitely a reason to be a little cautious. It's essentially just waiting for a trigger, right? If you want to wait for the trigger, the weekly close above 133, that's going to put you in a much better position for potential profit versus just buying now. And then what if we reject into the coming weeks? You really have to wait for these triggers, and that's what I really focus on in the Twitter subscription, is keeping things very systematic. If this happens, then this is the target. If that happens, then this is the target. That's how you can really keep things very systematic and really changes your whole approach versus just buying on a whim or on emotion. Meta is the last one that we'll go over, and Meta is really interesting here for a number of reasons. One, if you look at some of the lower indicators here, and just a reminder, when you're in a bull market like this, sometimes you're going to get false signals on lower indicators. Definitely has happened over the last couple of weeks, especially as we've been kind of chopping around. When you're chopping around and you're consolidating for a long time, lower indicators definitely don't have as much value or hold as much weight. But I will mention that you do have the RSI still printing negative divergence here. We could easily bounce above the previous high here, which would invalidate the divergence. But we also have divergence here on the Williams percent range. And the MACD is starting to curl to the upside, so that's something to consider for a potential new upside move. But for now, that MACD line has not crossed above the signal line. So if we just stick to price action here, we are within this ascending wedge. We are nearing the apex of the ascending wedge. Notice here how price is, the ascending wedge apex is right at the previous price from the resistance that we had back in November of 2021 and December of 2021. That ranges from 346.80 to 353.65. So if we were to just kind of chop within this apex of the ascending wedge, or you want to call it rising wedge, either one, we definitely have a confluence zone of multiple resistances, one of them being the diagonal trend zone here, which is the top of the ascending wedge, and then the previous highs, which is horizontal resistance. So, or at least horizontal resistance for now. It's a potential resistance zone. Nothing is resistance until it's proving itself. It proved itself back in November and December of 2021, but for now, it is not technically resistance. It's just a level of interest to look for potentially price to have some trouble getting through. So all in all, ascending wedges are actually what I would call a statistically bearish setup. And the reason I say statistically bearish is there is no setup in the market that is 100%. You can have a falling wedge, which has a statistically bullish setup or a statistically bullish bias, but that does not mean that it is definitely going to break to the upside, just like a descending triangle. Descending triangles are statistically bearish. They break down more than they break up, but that does not mean that it's 100% guarantee that it will break down. Same thing here with the ascending wedge, the rising wedge here. Statistically, it is a bearish setup, but you can have big moves to the upside, especially if you break out to the upside. Especially when you have this confluence of resistance. You've got multiple market participants that will see a breakout, not only market participants looking at this diagonal resistance zone, but also looking at this basic horizontal zone. And so that's what kind of creates these moves is everybody is seeing a breakout at the same time, and that's what really can sometimes create some big moves in the market. So hopefully this overview was helpful going into the week ahead. If you have any questions or comments, you can leave them in the video comment section below. If you have any questions about the Twitter subscription for $10 a month that I offer on just basically on the Twitter platform through my profile, you can either send me a message on Twitter, my DMs are open, or you can comment on the video below. I'll put the sign up link in the video description. So if you're looking to sign up, just go to the video description. It will say sign up for the Twitter subscription for $10 a month, and that's where you can do that. And also, if you are interested in futures and just futures trading in general, definitely check out Optimus Futures. I have the link in the video description as well where you can check them out. And as I mentioned, if you have any questions, just send them in the comments section or in my DM, and I'm happy to answer any questions you have. Hope everyone has a great weekend, and hopefully this overview was helpful, and we'll see you next time.